Hello to everybody, our dear subscribers. FutureTrend channel is again with you, and today is 2nd of November 2018, and for you our presentation of analysis of major currencies. The question is how to trade major currencies in the current environment and how to react to the incoming information, not only economic kind of information but also information regarding geopolitical risks or, for example, political factors. And that's the truth. Yesterday was quite interesting session of the dollar slump. As you could see, the dollar weakness is gaining momentum at the moment, and that's because of two factors. The first one is the phone call between United States and China leaders, and the market reacted to this call really very positive, hoping that next round of United States and China trade relations will be more or less calm and more or less quiet, not so dramatic how the United States leaders described during last period of time. Also, another interesting news came from the UK, where first Bank of England is ready to increase its benchmark interest rate in case of smoothly going process of Brexit negotiation, and second, as you could see, UK and European Union is finally found the kind of future relations into their financial markets, into their banking sector. All in all, this kind of news the market took really very positive, and as a result, two currencies really made a kind of good progress against the United States currency. That's UK pound and the Aussie dollar. Both of these two currencies gained around 1.8% on the balance during previous trading session. Let's start our today's analysis from the sterling, which is trading around psychologically important level of 130. As you could see on the 4-hour chart, now we're speaking about technicals, we broke above the immediately bearish kind of downtrend line in the pair. Yesterday this pair laid around 127.80. Now next level to watch is the 2018 downtrend line that's located around 131.20, 131.30, and in case of breaking above this trend line, probably we should understand that we are forming a kind of turnaround, a medium to longer term turnaround in the price of the cable, and in that case, you know how volatile could be English currency, UK currency, and in that case we could expect some more upside progress and reasonable kind of progress from the cable. At the moment we closed our existed long position in the currency, which we entered at 127 during previous trading session. We closed it yesterday at 129.10, and now we are ready to rebuy the currency, the cable, at 129.20 with a stop below 28.50. Probably today's United States payrolls report, in case of some upside surprise, could give us a chance to enter fresh long position in the cable. Anyway, all in all, if we look at the daily chart, once again we probably formed a kind of double bottom formation, double bottom in the cable, and probably during next weeks we could see some higher resolution from the cable. The time will show, of course. As regarding the Aussie dollar, now let's speak about commodity block of currencies. Commodity block of currencies. Also, you know that we had a long position in the Aussie at 170.50, but yesterday we were out from this position with the profit of 1.5 figures at 0.72. Now we are ready to rebuy the Aussie. Now we are ready to rebuy the Aussie in case of a dip below this level of 72. Now 71.90 is a first kind of support in the currency. Probably we could retest the broken downtrend line in the currency, and probably today's payrolls report will give us such kind of chance, a kind of down tick to below 72 to re-enter a long position in the currency with a stop below 71.50. All in all, if we look in the daily chart in the Aussie, we suggest that it's time to buy the currency. We told about that a lot of times during, especially the second half of 2018, that sooner or later we could see a sharp fall in the price of the United States currency till the end of 2018. Probably it's time to buy everything against the United States currency. As regarding the Aussie dollar, next formidable resistance is located around the moving average 200 daily line, that's located around 74.85, and at the moment that's a kind of a reasonable aim, a reasonable target for the upside move of the current upside move in the Aussie dollar. The same applies, by the way, for the New Zealand dollar, which on the result of previous trading session also broke above its 2018 downtrend line. But you know that a lot of times during 2018 we broke that trend line to the upside, but without any kind of resolution to the upside. Probably these days the situation is a little bit different, and next level to watch in the Kiwi dollar is a kind of moving average 200 daily line located at 69.15, which could be retested during next couple of sessions, especially in case of a negative surprise from the United States payrolls report of today. As regarding the dollar Canada, here we suggest to remain more or less neutral, because today is not a day just of United States payrolls report, but also the Canadian employment numbers. And we expect that these numbers will come in below expectations, and they could limit the upside potential of the Canadian dollar against the United States brother. As regarding the euro crosses, let's see the situation. As regarding the euro crosses, here we suggest to remain flexible as regarding the euro yen, and we are ready to sell the currency at 130.30, where lies a kind of interesting resistance barrier, against the level 130.50. We will use such an opportunity of retesting this level to sell the euro yen. At the same time, a possible downturn to the level of 126.80, where lies current uptrend line in the currency, could present for you an opportunity to enter a long position in the euro yen, because we should understand that in case of a turnaround in the price, for example, of the euro dollar, in that case we could see euro yen higher, not lower, because the Japanese yen should be not so strong as, for example, the euro currency. Euro sterling, taking into account the current situation regarding Brexit negotiation, we suggest that it's time to sell euro sterling, probably on a possible retreat to the level of 88.35, where lies moving average 200 daily line. As regarding Euro Swiss, here the situation remains the same. Easy buy on a possible dip to the current uptrend located at 113.40. That's why we are ready to buy Euro Yen at 113.50 with a stop below 113. And Euro Sterling, we are ready to sell it at 88.30. And once again, about the Euro Dollar, our long position still it is here at 113.10, accumulated a couple of sessions back, and we suggest that probably we could see some further improvement in the picture of bullish potential of the euro currency. Of course, first of all we need to break above 2018, above current downtrend in the currency located at 114.60. But all in all, we suggest that probably we formed like in for example, like in cable, we formed a kind of a double bottom formation. As you could see, we retested the level of 113 2 days ago, and now probably it's time to for the euro dollar to gain momentum to the upside. And we encourage you to use any kind of downtick back to below, for example, the level of 113.50 to buy back the euro dollar with a stop below 113. That's our prime idea, because we still suggest that the United States dollar will losing ground during next couple of months till the end of 2018. Take care. Bye bye for now. In case of big fluctuations after the United States payrolls report, we will come with a fresh updating of our portfolio.